Hi, this is Silver Dave, and how prepared are you for 2021? Well, let's find out. So, short disclaimer. I don't have a crystal ball, but I do have some facts. And I can't tell the future, but I can tell you what's happening right now. So, let's get started. And it doesn't look good. Most people and most analysts have been looking at the United States and expecting a fast recovery in case of a Democratic victory. And they're expecting if Biden wins, that the stock market will go down a little bit, but overall it will be good for the economy. And if Trump wins, the stock market will go up. And if the Republicans maintain Senate, there's a deadlock, the stock market will be very positive for the markets. I think they're completely wrong. They're overlooking the big picture. They're looking as if the United States election can all of a sudden remove reality from the world. And that is the major problem. So I do follow the stock market. I do follow current events. And I do follow the current presidential race in the United States. And I do also look at what central banks do, and I'm thinking, okay, what are they missing? What are they not looking at? And what have all governments and all these analysts not been looking at during this whole time? Well, they missed something pretty major. That everybody has been focused on the United States and the individual case rates in the United States for the current pandemic, right? They're saying, oh, there's like a surge from I think a few weeks ago it was 50,000. Now you have 70,000. This is public information from Worldometers. I'll put the link down below. You can look at the data yourself. This is information from yesterday. So I have all the numbers in the United States. Yes, it's leading the world in cases, right? But the United States, people forget, is a very large country. And essentially, it's pretty much the size of the whole of Europe. And you have quite a large population there. And I'm like, yeah, so what if I take other places and I group them together as the same like sort of size as the United States? Where else have I been seeing surging cases? Well, I live in Europe and I see right now that there is surging cases. So I decided to look into it. I was like, okay, what's going to happen soon with all these cases before 2021? Because I want to be ready for 2021. Everybody's saying that there's going to be a V-shaped recovery or K-shaped recovery. The stock market will stay stable, or we're going to see like stable bonds. There's not going to be like it's not going to be too bad. 2021 will be better than 2020. I looked at the numbers and I think 2021 is going to be way worse than 2020. I don't want it to be way worse. I want my normal life back. But when I just look at the numbers, I think, yeah, it's just unrealistic. And I'll tell you why. So I look at the whole of North America. I'm like, okay, that's roughly the same population size, and then it's comparable to Europe, right, where I live. And then I look at Europe, and I'm like, holy shit. Yeah. So I was turning a blind eye on Europe. There's not so much news reporting going about like Corona, going about the pandemic in Europe right now. But if you look at the total numbers of how many cases there are in Europe, excluding Russia, you can remove Russia out of it, you're more than double of North America. You're like, whoa, 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 what does that mean? What's been going on? Well, I decided to take like the major economies in Europe and like put them side by side to look at how they're evolving in terms of the cases, right? So yes, during the first part of the pandemic, everybody maintained somewhat of a flattened curve. They maintained control. The UK, France, Italy, I mean, some of them spiked more or less, but over summer, they've been maintaining control, right? What happened then? They relaxed. They relaxed measures very quickly, and this is what happened. This is what has been happening over the last few weeks. Everything has been going parabolic. It's been going exponential. It's been you're seeing cases double every single week. This is like, if you talk to, I've read some articles by epidemiologists. They said this is like the thing you see in classes when they teach you about epidemics like spreading. And you have a perfect exponential curve, and you do have a perfect exponential curve. Let's look at France, right? There are new cases, exponential. When did it start? Last few weeks, it's gone vertical. And for information, this is the first one. You can see that, yeah, you're like, oh, it was pretty much flat. Relatively back in May, when you were looking at this graph, you're like, it was horrific, right? The curve was going up, people are panicking. The new scale of the of the cases is magnitudes. It's made the initial wave look like a joke. Like literally, you can look at this. This is literally, it made it look like a joke in France. You can look at it in the United Kingdom. It looks like it was a joke, the first wave. You look at it in Italy. Yeah, the first wave, this is the active cases, total cases. Active cases, the first wave, it was like this little bump. And what you see here, it's going to break the bump. If it keeps up the exponential wave, it's going to go all the way up here. It's going to make it look like absolute joke. And in this wave, to reduce it down, they have to sacrifice about 10% of the economy, right? What are they going to do for this one? Are they going to let it keep on rising? They're like, yeah, if they don't do lockdowns, it's going to work. Everybody's going to be fine. We'll talk about that. I'm not really sure that's going to be the case. Even Germany. Germany has a bit more under control. They have a much lower death rate, but they're also going into parabolic. You can see it's clear. The shape of the curve is going into an exponential, and the first is making the first wave look like a kindergartner compared to a giant. I mean, it's just not even comparable. Spain also, you can see that total cases, it's gone exponential. In each of these countries, France has curfews from, I believe, 9 p.m. later on. The United Kingdom's introducing curfews. Italy's introducing curfews. Germany has nighttime shutdown, closing hours. Spain has curfews for the next 6 months. These are the major economies of Europe. If these economies do not run and cannot function properly, then the economy of Europe is going to tank. It's not it's kind of like watching a ball roll off a cliff. I mean, I don't have a crystal ball. I can't say like for sure the ball is going to fall off the cliff and what's going to happen to the ball, maybe it'll survive or not. But I'm seeing it rolling down the cliff and I'm like, it's going to be pretty bad. So why are people not more aware of this? For me, I think it's not because it's not being reported. People are reporting it. But you have to imagine that Europe is hundreds and hundreds. Just here, I have 5 different countries. They all speak different languages. The reporting for each individual one is in their individual languages. And you will find very few aggregators that aggregate all this news together, like in the United States, where they will aggregate all the states together. Each one of these is the size of a state, roughly, right? Imagine this. If this was a country, it would be the United States. But these are individual states reporting each one by themselves, not communicating with each other in a coordinated manner. There's no oversight between the countries. And they're getting these numbers. And I take all these numbers together and I look at it and I'm like, holy, yeah, that's pretty bad. That's a humongous number. And why is this specifically super bad for the European economy? I read an article that said that 1 in 10 jobs in Europe depends on tourism. And if you have a pandemic, you're not going to get tourists. When was the last time you decided to go to a malaria-infested country because the weather was nice and the vacation was cheap? Nobody does that. If you look at a lot of the countries that are underdeveloped and that are economically suffering, it's because they have epidemics. They have epidemics that directly hurt the economy. Even if they maintain everything open, countries that have malaria, they don't close because there's malaria. They're still open, but they cannot trade. They cannot have tourism. One of the main drivers, the main source of export in the 21st century is tourism. Tourists are great for trade because they come, they spend money, they buy your currency, first of all, they give you their currency, they buy your currency, and they spend and they distribute your currency to your local economy at zero cost to the government, right? It's amazing to have tourists. Tourists also are you don't need to do a lot of R&D. You don't have to do a lot of maintenance to have tourists. Relative to manufacturing, the pollution footprint, the economic footprint, the investment footprint is much lower. Tourism is high margins, low investment, and low research and low risk business. It's amazing if you have tourism. All of these countries are major tourist destinations, except for Germany. Germany is the one that's doing kind of well out of all of it, but Germany depends on the export market, which means that other countries have to consume and buy products. If the world goes into a global recession and nobody buys cars or manufactured goods, Germany is going to suffer too. But these countries depend directly on tourism. France, largest tourist destination. Italy, second largest tourist destination. Spain, third or fourth world's largest tourist destination. In these countries, I would say maybe like 1 in 5 people work in the hospitality and service sector. And without tourism, you're going to see a huge chunk of that economy being taken down. And Italy, Spain, France, these are countries that have high levels of debt. They took out a lot of debt to grow their economy. And the way they're paying back that debt is with stimulating tourism. Yeah, that's not a good picture for 2021. If you don't have tourists coming in and buying your products, it's not going to stimulate your GDP. It's not going to have people buying goods and services, and it's going to generate much less margin. It's just bad overall for the economy if you've invested in tourism and nobody comes and buys stuff. Why did they? You could say like, oh, they were dumb to invest in tourism. No, it was very smart. As long as you don't have a pandemic, tourism is very, very profitable. It's probably one of the most profitable businesses and the best margins for you to run because first of all, the workers, you don't require skilled workers. You don't require engineers to build airplanes. But the risk is if you have a pandemic, it's very difficult to get out of it. So, knowing this, right, what do I think is going to happen after the election? I think it won't matter. I think whatever happens in the US elections, it's not going to matter to what's going to happen in 2021. I just want to get that out of the way. What happens in 2021 will be dependent on how well the pandemic is controlled. And right now, I'm looking at the numbers. I've seen the cases dwarf what's happened prior. I'm seeing a pattern. I'm seeing a pattern, a repeat of what happened back in early February, is that you had a first series, right? You had places like, I'm gonna take the silver, like China. There was a start of the epidemic there, right? They started locking down, people are locked in their houses, and you had countries in Europe, which were the next affected, looking at what they were doing in terms of measures. They were like, oh no, we're not going to do that. We can't do that because people will riot, they will be unhappy, and so on. Yes, that's true. They will do that. So what happened in Europe? Well, let's take, do I have a European coin? Yeah, let's take that. This is a European coin. What happened in Europe? Europe decided that, okay, we're not going to do the full measures. We're going to do soft measures. We're going to do like as if there was, we're not going to do full shutdowns. We'll do partial shutdowns. We're going to put a small curfew in place. It didn't work. It still spread, and obviously economies were damaged. You can cite Sweden. Sweden also went into a recession because of, even though they didn't lock down, it didn't matter for them. Caseloads went up. When caseloads go up, it's not a question of whether you lock down or not, or people want to go out or not. It's when caseloads go up, there will be people who don't care and they will still go out. And for them, they're like, yeah, it's great. But I would say that around 40% of the population are very conservative and don't want to take the risk. I mean, they just don't. And they don't need to go to restaurants. Nobody needs to go to a restaurant. Nobody needs to go to Starbucks. Nobody needs to go go to a nightclub to party. But people underestimate how much these social gatherings, when in safe and fun and people want to do it, generate a lot of revenue and generate a lot of revenue for businesses. They won't participate. And businesses prior to the current situation were already running on thin margins. I mean, most businesses that I know of prior to the current pandemic, they were running on maybe like, net profit of 1 to 5% was a good measure. That's not very profitable. Imagine if I told you, yeah, give that guy like $100 and in 1 year, he's going to give you $1 or maybe he will go bankrupt. Do you think that's a good business or good investment? No, it's not. But people, because the returns were so low and because after the 2008 recession, the Great Recession, people were doing return seeking because everything was returning so low relative to the stock market. But even the stock market, you look at valuations of companies since 2014, it was completely insane. Like, how can you think that a company, for example, I was looking at Harley Davidson, right, in their earnings report, they were earning 70s. They said that they beat expectation at 76 cents on the dollar. I was like, that's pathetic. That's pathetic returns. And people are saying that it's great. How can that be good? They are near bankruptcy. Who's going to buy motorbikes in this current situation? It's not your current, like, people are going to buy bigger SUVs. I think like the things that might survive are things that people will be like, okay, I need a vehicle that can carry all my stuff in case I need to get out. People are going to buy bigger cars that can transport more goods and transport more stuff. Just because of the situation, they'll think of utility before looks. Unless there are certain products though that might survive the current pandemic. But there are very few products that will survive. And I think governments, they don't have a choice. For 2021, what I think will happen is this. For 2021, this is my opinion. I don't want to make a prediction. I think that for 2021, we are going to see a stock market crash. And we will see a crash in the sense that businesses will have no revenue because there is very little actual business and people moving around and buying things. We're going to see deflation in terms of energy prices because people aren't buying petrol. There's going to be a reduction in the consumption of petrol. We are going to see a bungled fiscal stimulus across the globe. So the initial reaction of most governments will be to bail out businesses. And they're going to do quantitative easing and they're going to bail out businesses. Who are they going to bail out? They're going to bail out airline companies, hospitality, and so on. It's going to be a mistake. I'm not saying that they shouldn't do fiscal stimulus. I'm saying that bailing out dead industries that don't have a future is like giving a dude that says that he will give you 1 cent on your $100 and potentially he has no customers and he might still go bankrupt. That's just bad investment. Do I think governments should do fiscal stimulus? Yes. What should they invest in? Basic infrastructure. They need to go and improve public transportation, make sure that you have safe public transportation, then people aren't riding in 50-year-old wagons. They should invest in telecommunications, improve broadband, improve so that people can work from home. They can do basic infrastructure investments like provide cheaper housing so, there's not a housing crisis. That's what they should do. But what I think they will do is they're going to bail out airline companies. They're going to provide loans to cheap loans to homeowners who are not actually homeowners, but are this type of rent-backed security owners and rent-backed security owner underlying asset owners. So people who are your landlords, right? They're going to give them to landlords and they're going to try to ease the debt because what's happening right now is a lot of people they've already had forbearance on your rent. You can't kick people out, and you shouldn't be kicking people out in this situation because everybody's in it together. But obviously, Wall Street doesn't give a shit, so they're going to say okay, the rent-backed security, we can't let it crash. If it crashes, you'll have a bank run. We're going to have pensions not able to fund pensioners' pensions. There's an aging population and so on. They're going to find arguments. What's going to happen then? I think what's going to happen then is that people, you're going to have the rent-backed securities getting loans to resolve their solvency issues. But it's not going to be, they're not going to have a forgiveness on their loan. It will simply be that they might be able to restructure their loans to lower interest rates, right? Which means that for the next foreseeable years, you're not going to have a rise in interest rates. The total cost of this will be extremely expensive, but it means that the first round of quantitative easing will only solve immediate issues in front of your eyes. What could they do? What could they do? And all this money will go into, if they could have done something different, they probably would have, they should have done like taken the painful decision to let some companies go belly up, to enforce laws to ensure that, that certain loans are just going to get defaulted. And these buildings, they need to find some way for the public, for example, like have a public structure, a public housing structure to say, okay, these rent-backed securities, they're not going to work because you're insane. Like for the next 5 years, we're probably going to see a downturn in the economy. You're just completely insane to think that you can make this profitable. So how are we going to do it? Well, you have to nationalize homes. You don't nationalize the whole housing market, but you nationalize the ability to give people shelter. That means people who are currently unable to provide for themselves. It is a role of a government in sometimes, especially in times of war and pandemic or natural catastrophes, to be able to provide shelter for people. That's why you have taxes. That's what your taxes are for. It's not so that like taxes can go to subsidies to finance banks. Come on, that's a bit of a perversion of why you're paying taxes. But anyway, I digress. This right now is an emergency situation. Part of the money should go straight towards having a way of providing continuous shelter for people for at least the next foreseeable 10 years so that they can get back on their feet and rethrow the economy. But I don't think that's going to happen. It's not going to work that way. They're going to restructure loans. They're going to restructure loans within banks, and they're going to restructure the rent-backed securities so that they don't go into direct default, but they're kind of semi-dead. And banks, of course, during this period, what they're going to do is they're going to offload those securities. They're going to offload it to pension funds, you and my pension funds, and they're going to make sure that a lot of funds have it and that they've cashed out of that market. Will that be a good thing for you and me? No. It's going to lead to a third cycle, maybe in another 8 years, where these assets are completely dead. And so right now, what's going to happen is that money is not going to stimulate. It's going to bring down a lot of the real economic power. It's going to bring down a lot of confidence people have in the markets, confidence people have in consumer goods, and it will introduce asset inflation. You're going to see asset inflation pretty quickly, I think, starting next year. If they do QE2 and they start doing that fiscal stimulus, right afterwards, it's going to go into, that's the first thing that's going to happen. You're going to see asset inflation. I think we're going to see a rise of price of precious metals. It's not a good thing that it's rising. It's a horrible thing. It's really, really terrible that it's rising. In normal circumstances, it should not be having the type of rises you're currently seeing in the markets. 30% gain or since the beginning of the year, that's bad. That's a bad sign. And one of the benchmarks I use to see if we are currently in a healthy economy or really terrible economy is we have monetary precious metals and we have industrial precious metals. And when I see a divergence between the two, typically that's when I think, for example, platinum, right? In a healthy economy, platinum should be pretty much close to gold. Relatively, it should be almost a 1-to-1 parity. Right now, we have a 2-to-1 parity. And I think what that means is current financial assets are almost 2 to 3 times their real valuation of what they should be. And I don't think I'm far off, because if I look at the earnings that all these companies are having, even FANG, even internet companies, you're like, yeah, they're not making a lot of money. They have volume, but the margins are so razor thin. It's like you're saying we made a really, really big house, but we made it out of cardboard. there's a lot of volume, and every year we need to fill it with more cardboard to prevent it from falling. It can work, but it's very fragile. All it takes is one earthquake and you have everything that falls. But it's too fragile. It has no resilience towards external shock. And sooner or later you have external shocks. It could be like, people are like, yeah, this pandemic, once it's over, it's over. I don't think this is the last pandemic we'll see during our lifetimes. And the reason why I say that is because in the 1980s, we had the Spanish flu that people forget. That's like 80 years ago. Then we had the HIV epidemic. Then we had Ebola, but it didn't affect Europe, Ebola, but you had Ebola epidemics across the world. You have malaria, you still have malaria. Thank God malaria mosquitoes don't travel they can't live in colder climates. But if they did, we would be in so much worse shape than we are right now. Yeah, I think there will be, and like I say, we are the most populous biomass on this planet. If you are a disease and you want to survive into the 21st century, you better be pretty good at infecting humans. Otherwise, you're going to die out. So yeah, we're going to see more. And we have invested zero into measures that prevent pandemics. Are there countries that have? Yes, South Korea has. I believe China has. These countries have already moved, and Japan to a certain extent. Japan less. They're still very much cash-based economy. These countries, they've moved on to contactless, cashless. But if you look at those economies, they do have inflation. The inflation level is so high. If you look at the price of pork, which is one benchmark they use because it's a consumer good, it's gone up 400%, I think, since 2008. So over the last 10 years, it's gone up 400%. That's crazy. That's the level of inflation. That's an insane level of inflation. But they've invested into technologies that allow them to be purely contactless, yeah, that's. But if you expect that level of inflation in a working economy, then what will happen to the price of gold and silver? If you have savings in cash or in the stock market, liquid assets, you might want to put it into physical assets, because these things, well, if you have 400% inflation, they will hold their value. I think right now, a lot of the currencies that we hold are overvalued. They are relatively overvalued to commodities that we have, because the economy has been doing so poorly. And there's just we're going to see a correction, and a correction that's not very nice. It's not very, I don't like making prediction on corrections. I think it's probably coming. I think that when I look at my indicator is when the economy is good, typically precious metals that are industrial metals are consumed much more faster, and you have a boom in them. That means that until I would say 2013, it was pretty healthy. The precious metals are industrial metals. They were being consumed at a pretty healthy rate. But then you had a correction, and I'm like, okay, most likely we're going to see a downturn in economy. Consumption levels are going to go down, and people are going to buy less. And there's a pretty good reason for that, because right now, if you think about it, for a long time, we have a lot of deflating forces on our manufactured goods. And you're like, what do you mean every year my iPhone gets more expensive? Yeah, but you don't have to upgrade every single year. Your iPhone can last. If you use it, you keep your charge, you try to replace the battery, everything, and you run on the lowest cost, or even you buy a much cheaper phone. I always buy the mid-tier phones because they run 90% of what the higher tier phones run. They're just less glamorous. They're not a statement piece. But the cheaper phones, they can be $200 and they can last you for 5 years, right? The first iPhone that came out was a lot more expensive. I think it was like $500, $600, and it had less functionality than the current iPhone. So there's a strong deflationary force on technology. all the time. It's constant because we're constantly inventing new things. What that means is we should have seen a lot more gain in, we should have seen a lot more deflation in our currencies. Deflation is not necessarily bad. It just means that whatever you earn, you should be able to buy more, right? You should have a real raise in your purchasing power in the last 5 to 10 years. We haven't seen that. Purchasing power has been remaining flat. I think, and what really will happen is that you have your currencies, they'll become worth less and less because people are realizing that, hey, actually, we're not getting our share. We're not getting the raises we want. We're not getting we're not having the standard of living that we are expected to have. And people are saying, oh, that's going to lead to deflation. No, that will happen is people lose confidence in currencies. And when they lose confidence in currencies is when you see inflation. That means the currency. And why do you have inflation, very fast inflation, is because the people who are accepting your currency, they're saying that I'm taking a risk. So suddenly I need to accept more currency. So my item, for example, I used to sell bread at $1 before I knew the currency was stable. I would take that $1 and I will go buy like another, I don't know, a toy or a candy for another dollar. I know the candy price won't go up because people trust this currency. But if people don't trust this currency and you're like, yeah, it might go up like 20%, it might go up 30% over the next week when I want to buy my candy, I better be safe. I take up 50%. That's what's going to drive inflation, right? When people lose confidence in the currency, it's not so much real wages, inflation rates. These are indicators. It's not the root cause. The reason why economists are very bad at prediction when they believe everybody's a rational actor and they try to use their models is, first of all, people aren't rational actors. And the second thing is a lot of how the economy works is pure faith. It sounds like pretty bad when I say it like that. It's a power of belief. And this applies to not just fiat money. It also applies to things like cryptocurrencies. It also applies to a lot of different things. What happens when people's belief systems are shattered? Well, right now we're in the process of it. It's very painful. We're right now faced with a pandemic that goes against everything we believe in. That is that governments can control things, governments can maintain order, that people are kind to each other, that the stock market is a great investment, index funds will return great rates. Yes and no. Index funds are great if your whole overall economy is great, but this is not like isolated events. Index funds are great if only sectors of the economy are affected. This is not something that just affects one single sector. It affects a chain. The whole of the chain is just exploded because of the current pandemic. What do? You have to move out of that market that really fast, as possible. For me, I just some people might predict, yeah, we can optimize, we can use shorts and so on and manipulate the market. I can tell you I have no stock position since 2015. So 5 years ago, I was looking at this and I was thinking, yeah, it's really fragile. If any black swan event happens to the market, you're not in a good place. It's just going to be a really, really bad situation. It doesn't have to be caused by within the financial system. It can be caused by other factors like war. I was betting that there would probably be another major war, and it would not be a very clean war. It almost happened when Donald Trump killed that Iranian general. I was like, holy shit, yeah, it might happen. And it didn't happen. Then we had the pandemic. I was like, yeah, this might be the black swan event. There's not much it's very hard to predict black swan events because usually black swan events are not recurrences of previous events. It's something absolutely new that you have never seen before. And of course, we've seen pandemics, but we've never seen a pandemic that spread across Europe and North America. We've seen pandemics around the world. Any country hit by a global, by a epidemic or local or pandemic, like the Zika virus, that was really bad for countries affected by Zika. It affected their tourism. They suddenly could not export One of the main things that you can export was the highest margin, which is culture. They could not do that. So, right now I'm looking that it's affecting Europe and it's pretty bad. So having a respiratory disease spreading like that it's not going to stop in 2021. We have vaccines, but just for a point of reference, it took, I think, 20 years to eliminate measles, and people have to take the vaccine, and we don't even know how long the protection is. So if it's like the flu and it only does 6 months, you can forget about returning back to how it was before. I mean, once the genie's out of the box, it's out of the box. You can't put it back. Yeah, and plus it can mutate and all sorts of other nasty stuff. So what do I think will happen to 2021? I think, at least in the short term, you need to be prepared. I'm going straight out. I've ordered a lot more gold. I've ordered, I think, almost 1 ounce more of gold, and I'm starting to buy platinum because platinum's so undervalued. It's really cheap, and it lets me get into the, I would say, heavier precious metals. The silver is more abundant, so the more rare precious metals at a much lower price point. And for me, it's really that, starting from the next phase is that we're going to see supply chain disruptions because of the pandemic, and then we're going to see rise in real prices for commodities, not energy. I would say people might argue that oil is not rising. I don't think oil will rise, but I think energy prices will rise. Energy means that the whole energy sector, not necessarily oil, but maybe battery. You'll see lithium, for example, rise in price. You might see other sort of energy sources rise in price. You'll see nickel rise in price. You might see copper rise. All these metals that are non-hydrocarbon based energy storage systems will rise in price. That's my opinion, sort of guesstimate of what might happen. I'm not a technical analyst. I don't look at the day-to-day so much. I do use it sometimes to see like, maybe do I think that, I'm on the right trend and can I optimize my trend? But I use a lot of like the macroeconomics to look at how the trend is going to go, like to make a prediction. And sometimes you're like, yeah, but you exit too early. I exit very early. I usually am very conservative in terms of what I buy. I mean, yeah, I don't have the best returns, but for me, if I make 20% returns, I'm happy. I'm like, okay, this is very safe. 20% returns over the course of like 2-3 years. I'm pretty happy, and then I like move out of it. And when I think it's starting to even get a little bit overvalued, I'm like, I'm done. I'm out. Yeah. So that's how I do things. I'm very, very risk adverse, I would say. I'm not completely risk adverse because I understand there are risks, but I'm relatively risk adverse. One final thing I want to show you of why you should be prepared is that the state we are in Europe right now, I think it'll come to the US. I'll tell you later. I'll show you this image. So this is the image of, if I look at the reproduction rate of the virus, that is, I'll put the link of where I got this number. The reproduction rate of the virus is 8.9 right now. That's a high estimate of what's the reproduction rate of the virus. And your infection over the period of roughly 1 week. So during 1 week, you will on average infect, if you're infectious, infect 8 to almost 9 people, right? What does that mean in terms of the cases? Well, a number of people infected. So humans, we are very bad at understanding compounded power and exponential rates. That's why we are typically bad at investing. For the spread of a pandemic, it's exactly the same, except the investment is the virus. The virus is investing itself into us. And the virus, it has a return rate of 890%. Okay, that's how good it is, and 809% per week. That's how good it is at investing itself. And it means that over 1 week, you turn $1. Let's say he starts with $1, he turns it into $9. They're like, that's pretty cool, but $9 is not so scary, right? What about week 3? How will it turn into? Well, it turns into almost $100, right? Week 4, it turns into $1,000. So yeah, $1,000 over a whole population is not so bad. It's controllable, right? If you have 100 million people, it won't take. It's still far away from 1,000 to 100,000. It will take forever, right? No. See, the thing is, people forget that this is a very, very strong exponential. People have a difficulty understand the magnitude that this thing applies. So if you go into something that is using this rate, you go from 10,000 to 100,000. It actually only takes a week. If that's the main, that's a rate, because all of these 10,000 people will infect 9 more people. So you're in the 100,000 range, right? You're still slightly under. You're at 95,000. Then how do you break into, so from 100,000 to the million range? It's pretty fast. I mean, it's 1 week, right? It's 1 week to the million range. And from the million range to 10 million range, it's another week. So from the point where you think, oh, we have 1,000 cases, we don't have to worry too much, to the 10 million cases range, it will be 1, 2, 3, 4, 5 weeks. So about 2 months of, uncontrolled spread, you will reach 10 million cases. That sounds pretty scary. And 100 million and then a billion. So it will take about 3 months to reach probably 1 billion cases. That's game over for Western Europe. What stage do I think Europe is on right now? I think Europe is on we're teetering between here, right? Right now, daily, I'm seeing 200,000 cases increase. So it means that within 1 week, we will see from the 100 case to 1 million. So we're going to be in the scale of 1 million cases total infected, right? And then to go to 10 million total cases. I'm not talking about previous cases, I'm talking about new cases. To go from 1 million to 10 million will be 1 week. That means that within 8 days, right, all European governments need to come out with measures that prevent this from happening. Because if you go from this, once this happens, unless you lock every single person up for 2 weeks, you're going to go to this, or even 50 million or some number relative to this. And then from that point, you just game over. You have no choice. Once you break this point, there's no turning back. The resources required to put this under control, right, compared to this, is 10 times as much. And we don't have the capacity. Humans, like any country, any region, doesn't have the capacity to do this. The second we reach this, game over. Like, I don't know if you play the game Pandemic, but this is like the virus won the game. This is like the whole region is just red. This is the point where you don't want to be in. This is the point. From this point, if you're going to spread to there, and you have everybody's transmitting, it's completely, forget about it. It's the world. It's everywhere now, and you can't go back. And to go back to this, it will take about 20 years of consistent vaccination in all populations around the globe. That's what it took for measles, right? Smallpox. It took from being something in the billions to this, and we had less of a population then. I think we had like 3 billion people on Earth. It took them 30 years. Can you imagine doing that for like 7 billion people? The scale it's off the charts, and people expect that the stock market is gonna hold up. I'm like, yeah, you're fucking kidding me. You're a joke. I mean, I think what we're right now is we're going through a traumatic experience, and we're going through denial. This is the we're going through the initial phase. We think that, we've conquered it and it's going to be better. I think it's more like we're in the eye of the storm, and the storm has multiple eyes in it. So it's like a hurricane, you have different zones in it where you have times of peace, and suddenly a bigger wave hits you. Most likely that's what we're going to go through. We're going to go through multiple waves, and then we're going to not see a real end to this. So it was quite a long video. Do I think 21-21 will be better? Sadly, no. I don't think 21-21 will be better. I think 21-21 will be much worse than 2020. and we thought 2020 was bad. Uh, it's going to be pretty bad. Why am I saying this? Because I'm seeing it before it starts in the US. I think what might happen in the US post-election, people will celebrate. Christmas is coming, winter's coming, family gatherings are coming, and then we're going to see a rise in cases. And honestly, can you individually say like you're not going to meet your family because of the virus? I don't think anybody's going to do that. I don't think people want to do that. And you're going to see a lot of cases. There will be a lot of issues. There will be social issues, there will be medical issues, there will be supply chain issues, and then you're going to see real inflation. You're going to see a lagging economy because of it. And not because there's inflation, but simply because people are not consuming. Like companies will have to put up higher prices, but people aren't consuming. So it's going to be a pretty intense period. How long do I think it will last? I don't know. I have no idea how long it will last. In my head, like how much I'm prepared, mentally preparing myself, is that I'm preparing that it will last at least 10 years. That's how much I'm preparing myself for, right? It might be too much, but it's how much I'm preparing myself for this thing to last. Is the next 10 years, this is the world we're gonna live in. That's what in my head I'm preparing for. And I have made my peace. I'm ready to accept that. I don't think a lot of people are ready to accept that. I think a lot of people are not ready to think that this will be the next 10 years of our lives. We'll have to deal with this. It will be hard. Can you imagine if I tell you that in the next 10 years, you'll have to accept this? This is a very hard pill to swallow. It's kind of like taking, in the Matrix when Neo has a choice between the red pill and the blue pill. Well, one pill is much harder than the other, and I would say 99% of people will not accept it. And I think we're going to see a long time before it becomes the norm and the reality settling in. I think that are governments trustworthy? I think governments have no clue what they're doing. I think they have no clue what they're doing. Do I think that the virus is real? Yeah, of course it's real. Do I think that you should take basic measures to protect yourself and people you love? Yeah, I think you should. Do I think you should be financially prepared and start taking on more precious metals? Yeah, I think you definitely should take up more precious metals if you can, because we don't know how well the monetary system will hold up, and we don't even know how cryptocurrencies will hold up. But we do know that in times of distress, precious metals and monetary metals tend to hold themselves better. So that's what I'm doing. And also, you need to have a certain amount of cash flow on the side, and it's one of the only assets that I know of that you can choose to put only a small amount without going all in, especially hard commodities. Like, it's very hard to purchase commodities. Silver is a commodity. Gold is also a commodity. It's a commodity-backed currency. If you want to buy other commodities, you have to almost be a company, because you can't go and buy, like, you can either do it through a bank, or you have to go through you have to be an entity that stores it, right? How are you going to buy petrol? How are you going to buy crude oil? Like, you have no access to crude oil. You have no access to lithium stocks. You can buy lithium companies. They could go belly up because simply they can't mine the lithium because of the virus going around. I think, when Buffett went into Barrick Gold, it's profitable, but it's going to be less profitable than expected if they have to stop operations from mining because of safety measures. That's a matter of fact, right? What I think will be the most valuable thing starting from the next point onwards in 2021 and onwards is, first of all, being able to stay in good health. That's the number one most valuable thing. The second thing is stable currencies that are independent of government action. That's and also independent of any type of sort of dependency on other transactions. You can think like Bitcoin is independent, but Bitcoin is not independent. You cannot take Bitcoin and make a trade with it in a forest. Like if things start really going bad, you can't use Bitcoin. Like you need the internet to use Bitcoin. What are you going to do if telecommunication companies are not able to provide the services? You know, they have phone lines that go out, right? And you're in a zone where you depend on phone lines to make your transaction. This is a very basic part of technology. You need phone lines for digital technology to work. If you don't have people maintaining phone lines, like you have a storm, suddenly you don't have access to cryptocurrencies. Great. But if you're gold and silver, physical gold and silver, it will hold. That's the way it is. Am I buying more gold and silver? Yes, I have bought new gold and silver, and I'll do a presentation on what I bought. And this video was really long, but I had a lot of things to say. And I have to say thank you for watching. If you like the content, feel free to click the like button, feel free to subscribe, and click the bell notification button. I post daily videos, and thank you for watching.